Okay, hello and good afternoon. I'm recording this on afternoon, Sunday afternoon. So this is the weekly recap or trade breakdown of the trades that I took over that week. I'm saying trade breakdowns because this week I took several trades from Wednesday to around Friday when I got the actual buy that I have posted about. So let's get into it. This video will be better for you if you have already watched the weekly preview that I posted on Monday. Yes, so let's pick it up from there. If you remember well, I wanted to see what Monday's trading will do. And Monday's trading, this is Monday's candle, the one that I'm marking right here over the, yes. So what did Monday do? That is the first question that we ask ourselves on Tuesday when we actually started trading. We can see that on US100, Monday traded and swept Friday's low, and then it traded back inside that Friday's range, right? When we go to US500, let's zoom in for a better view. On US500, this is Monday's candle. It also swept Friday's low, and then it traded back inside that range. So what on Tuesday? So on Tuesday when I came and I saw that price action, it was a sign that the market was willing to trade, was going to trade higher over the week, right? So my bias was bullish. So let's just mark that out. Whatever I've just explained. This was Friday's low. And then we have on US 100, 500, I mean, that is the ES. We have the same low being swept on Monday. Remember that we are assuming that all of this price action from Tuesday to here has not occurred, right? So let's go back to US 100. We are also assuming that this big down close candle has not formed yet. All we have is that Monday's candle swept Friday's low. Monday's trading swept Friday's low. Alright. So after seeing that on the daily chart, I went down to the lower time frames, right? And going down to the lower time frames, let's go to the 1 hour. Let's go down to the 1 hour. On the 1 hour, what I usually do is I mark the daily divider with a vertical line. So this is Tuesday. All right. Okay. So my analysis pre 9:30. Let's also do the same on this, on US 500. I'll mark that as my midnight open, and also the same on Monday midnight open. All right. I'll just move it right there. Excuse me. Sorry. So this was marking the Friday's low, right? So let's just label it as previous day low, which will be Friday's low. Friday's low had been tagged. That is the previous day low. And according to the analysis that I had done, if price did this Fridays, I wanted to see bullish price action if price was able to close back inside that range. Okay. I wanted to see a reversal to the upside. Fridays. Actually, this was one of the weeks where the market tests your patience to the brim, but we held on to it and we held on to our bias and price action. So this is Friday's low. Right, now we have that. So once we get a sweep, we have swept this liquidity, which is in the form of Friday's low, the sell side liquidity, which is the Friday's low. Okay, we swept it on Monday and price closed back inside that range as we have seen on the daily chart. So what I wanted to see on Tuesday is trade at I wanted to see at the midnight open price trades lower for some form of manipulation, and then we can trade higher and target all this liquidity, this and this all-time high. You can see that there was a lot of liquidity to target. So this is what you later label as TP1, TP2, TP3, blah blah blah. So I wanted to see price trade lower and then we can displace higher. Okay, so what happened on Tuesday? This is Tuesday right here. Let me just mark it out so that we do not get anything confused. Okay, just mark that as Tuesday, but assume that everything from 7 has not occurred because we only trade the New York session from 8:30, 9:30. So let's assume that all of this down close has not been seen. So when I came to the market at around 7, what did I see and what did I get? I saw that we had already created some form of daily low already at 1, okay, on US100. And then I looked at US500 and I noticed that we had created a lower low, okay? We had created what we call a lower low, this one here at the same time, 1 a.m. So if you have been listening, what do I call that? If one pair has formed a lower low and the other one has formed a higher low, what do we call that? SMT divergence. So I mark that as SMT with Nasdaq, and on the other side, which has formed a higher low, SMT with S&P 500. Okay, so once I had that marked out, remember I do not have any of this price action from 7. I only have this to work with. So, and remember I said that on Tuesday, because I was expecting a bullish day, I wanted to see price trade lower, a bit lower, and then displace higher. So when I saw this SMT straight to my head, I analyzed it as as the daily low that had already formed. So I wanted to wait now for the 8:30 and 9:30 open to observe what kind of highs and lows form, because they are very important highs that and lows that form during the 8:30 and the 9:30 open. Okay, so I waited for the 8:30 and 9:30 open, and we did not have any news or any high or medium impact news releases, so I did not expect any random volatility. Okay, so as I waited for the 9:30 open, I think some other form of what of previous some other form of SMT formed. So let's see what we get. I came to US 500, waited for the 9:30 open, so we will go down to the 15-minute so that we can do further analysis from that time frame. Remember, this is Tuesday. Okay, just a minute. Tuesday, 19th August 2025. So let's see what the 9:30 actually did. So at 8:30 we did have in much volatility, but then here comes 930. This candle right here, right? This down close candle right here, I will mark it as my last down close candle that actually swept a lot of sell side liquidity. LDC, mark it as the LDC, last down close candle, which if traded back into forms an order block or a change in state of delivery. All right. So on US 100, that is what happened. Then we come to US 500. We go to the same day, same time, and we observe what we got at 930. This is 930. Where is it? Yes, 930, right there. It came lower. It did not. You can see that it maintained its own daily low by that moment at that time at 930. So that was another SMT template. That was my last down close candle at the moment. So we had another SMT moved from this point to this low, because you can now see that on US 500 this low was not swept at 930, while on US 100 this low that had formed at 1 a.m. was swept at 930, thus forming another SMT right there. So at this moment, what did I expect? I expected that I would take longs on US 500, which is the more bullish pair, because it did not sweep its current daily low at 930, right? As you have seen here. So once I got this, what do I call it? Once I got this down, this last down close candle, and then at 9:45 we had this indecisive candle. But then what happens at 10? At 10 we got this up close candle, which formed my change in state of delivery, CISD. So once I got that change in state of delivery, like I have been saying, I have two forms of entry. The first form of entry is an aggressive entry, where you enter immediately after the close of that candle, after the formation of the CISD. And then you can also wait for a retracement into the change in state of delivery, and then you can wait for a confirmation, which is actually the best move. So at this point, I usually like to take one position as an aggressive entry, and then I will take another one if we retrace inside and confirm the entry. So my entry right there on a 5-minute, it was around there. My stop loss was at the current daily low, which I believed was now cemented as the daily low. For targets, I was targeting the previous week's highs and all this liquidity up here. Okay, so that was my first position. But then I also wanted to take another position once we retraced inside the below the change in state of delivery. But that one you need to wait for another confirmation. It need to retrace and then you wait for another change in state inside that range. Okay, so as you can see, I was stopped out on this trade, but I had only taken one position as an aggressive entry, because I have explained that is what I normally do. I take one position as an aggressive entry, and then the other position is what I will add my normal sizes and I will pyramid. Okay, so I was stopped out on 500 on that trade, and as price traded lower, I kept looking for re-entries, but we never got any other change in state of delivery or anything. So I just, by the time it was getting to end of day, which is 4:15 p.m. New York time, I was done with the day. I could not trade any longer. So that was it for Tuesday. So let's get into Wednesday. Okay, on Wednesday we had FOMC at 9 p.m. FOMC meeting minutes. And what do we say about FOMC? On FOMC days, we never trade during FOMC. So if you want to trade on FOMC, I would advise that you come in the morning, trade in the AM session or the PM session, but close all your trades before the FOMC meeting minutes start. So that is what I normally do. So let's look at it. That was Tuesday. Now, going into FOMC, like I said, now once we had this bearish price action on Tuesday, it changed some things on the daily chart. So we'll start again with the daily chart before we go to the lower time frames, because as I have told you, this was a very busy week. And if you have not joined my WhatsApp channel, it's free, where I drop this analysis on a daily before they happen and how they play out. So if you haven't joined, kindly get the link from my X page or from my WhatsApp number or my Instagram. It's everywhere. So if you found this video, you can also find the link to my channel, I believe. Okay, let's just clear this so we have a clean view of what we're looking at. So FOMC Wednesday, but we always start with the daily chart, right? So on the daily chart, what I noticed was that Tuesday on US100, we formed what we call a daily change in state of delivery. Okay, right here we formed our change in state, because that was the last up close candle that took major liquidity, and then we have traded back inside it and closed below. But then I noticed a very important difference on US 100, right? This is Tuesday's trading. It did not take out its own last up close set of up close candles. So what does that mean? We do not have a confirmed change in state on US 500. Okay, so I looked at that as a sign that we are not really interested in shifting our gears to bearish price action, but rather price will still continue to trade higher. Okay, because if we had gotten the confirmed change in state on both assets, that would have confirmed the bearish, that we have moved to bearish price action. Okay, so once US 500 gave me that hint, I kept looking for a bullish reversal in the intraday price action. So what I did is, as usual, I waited for the 8:30, 9:30 open. Another thing that I noticed was that on US 100, right, we had this fair value gap. We had this fair value gap, this daily fair value gap right here. You see it? Okay. So my analysis on that day was that this down close was targeting to rebalance this imbalance in the form of a daily fair value gap. So the run lower was just to balance this, and then we go back to trading higher. So going into Wednesday, this candle right here, this one right here, what I wanted to see is a reversal, and then we trade higher. Okay, so let's get into the charts and observe what happened. On that same day, I had this fair value gap here on US 500, which was being respected by that day, because remember, we do not have Wednesday's price action yet. All we have is Tuesday and Monday and all that. So I noticed that Tuesday traded into but did not close below, while on US100 it also traded into its own daily fair value gap but did not go below. So let's get into the Wednesday intraday price action. Let's go down to the 1 hour chart. We could also go direct to the 15 minutes or something, because I think that is on, but let's just go through this. I will delete this fair value gap because we have already talked about it from a daily perspective. Okay, so let's go down to the 15 minutes and see what I saw at 9:30 open. Okay, I'll actually delete even the change in state so that we can focus on the intraday price action. Wednesday 20th. Okay, I'll just mark the midnight open right there, and yeah, 15 minutes we have a huge gap right here, so don't know how I will analyze that. On the 15 minute it's looking a bit shady. That does not look really good. Ban. Tuesday the 20th of August. This video will be quite long, and I do not like making long videos because I want to keep them short and packed with information instead of them being this long. But for such a busy week, you'll have to bear with me. It will be a long video. So what do I get at the midnight open? Remember that on Tuesday, I kept looking for a change in state of delivery so that I can take a trade. So here comes Wednesday, and then uh, there was this consolidation price action from the midnight open to the 9:30 open actually on US 100. When I go to US 500, we have the same thing. Let me use another broker because it's that gap on that chart should not be there. Yes, that gap should be filled. So I'll mark the midnight open right there. Where is it? Right there. Mm. Right there. Okay, so you can see that also on US 500 we had a consolidation price action until the 9:30 open when price broke lower. What we call this is a sell side liquidity sweep, and that was very expected because anytime I want to see price trading higher, I first expect to see it go lower, take orders and sweep liquidity, then we can change the state of delivery into bullish so that we can trade higher. So what happened at 9:30 was that we traded lower lethargically, because as you can see this was 9:30 and right here is at 9:50. By 10 a.m. we had already dropped around 150 points lower. So I was starting to become a bit suspicious of the move, but I waited because that is what we do as traders. Okay, we wait for price. Okay, so we kept trading lower, and I kept marking the down close candle. So by the time it got to 10:50, we had already reached a point in price where price did not want to go any lower than that. So remember that I have told you I wanted to see price go lower, so I kept marking the last down close candle. Okay, LDC. So I marked it from here at 9:30, but then it moved to here after we had this up close, and then we continued lower. So I then moved it here after we had this set of up close, and then we swept all that up close. So this was the last down close at that point, and then finally we had again this last down close candle that started at 10:35 to 10:50. On a 15-minute chart it looks better, but it's okay, let's work with that. So once I had that marked as my last down close and I had this up close trade back inside, that is what makes it made it a change in state of delivery. And because we had already traded lower, I entered aggressively from that moment. And what were my targets? Because once I have a change in state of delivery, it's a go for me. As I have told you, I have two forms of entry. I take one or two positions aggressively, and then if we retrace, I will add more positions. But price sometimes moves so fast, so I like to take the opportunity and go in as fast as possible and as aggressive as possible with one or two positions only. And then I can add my third and fourth positions after we retrace inside that range. But what if we don't get that retracement? I had already taken the two aggressive or the one aggressive entry. Okay, I should have shown you on, I think I took that trade on US100, yes. So I'm sorry about that. Let's go to the 5 minute. Yes, 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 yes. This is beautiful. It was way more beautiful at the bottom on. So remember that this was my last down close candle by that time. Okay. Once I had that, that becomes my change in state, and you can see that we already swept all this liquidity. So all I wanted is a change in state, and then we trade higher. But then taking this entry at 10:50, I think, because once we got 11:15, once we got this close above, I entered right here at the open of the next candle. Okay. Yep. Okay. It was lower because we had the last down close here. Yes, now I remember it. And I took my entry on the open of that next candle. That is an aggressive entry. What were my targets? First of all, as I entered the trade, I wanted to target all the way these highs above here, the previous day highs. Those were my targets as I took that trade, as I started off. But then I asked myself one thing. Once we were already in the trade, I asked myself something very important in trading. There is an average number of points that the Nasdaq or the US stock indices move per day. So once we had this lethargic move downwards, I did not expect price again to reverse all that in one day. So it only made sense that I return my targets to the 930 to the current daily high, and that was to be my final target. As the trade went on, I came into realization that we could actually be trading lower today. So the safest point to get out of this trade will be at this order block. Okay, just mark that out. An order block is the last down close or up close candle before a lethargic displacement. So that was my real That was where I was going to offload most of my positions. Okay, so I held on to that trade, and I I closed all my trades at 415. So that is what I did. I held that trade and it did not touch my target. So I closed it at 415 because that is the end of the normal trading hours, and I like to trade during the normal trading hours. The only day I leave positions is if I have taken the TP1, TP2, and such and so on and so on. So that was Wednesday for me. It was a small win, but it was still a win because as much as we didn't reach our targets, it was something. Plus, I already made more than I lost on Tuesday. Okay, so by the end of the trading day, 415, right here, right around right there, I closed the trade and I called it a day. So if I had taken the trade on US100, we did touch the order block. You see, this was the order block right here. So if I had taken this trade on US500, it would have reached full take profit. So we are done with that Wednesday trade breakdown. So let's go down to Thursday. Okay. Now on Thursday, I believe we had some news, we had some unemployment claims and such. So let's look at it. I don't know why I can't really remember Thursday's trading very well, but I think I still took some longs. Let's go first to the daily chart so that again we can do what we do as usual, because this is what we call top-down analysis. You start with the daily chart, then you go to the 1 hour chart, order of time frames, because you need to have the bigger picture in your mind every time you trade so that you are not caught off guard and you know where to place reasonable stops and things like that, things that you can learn from any trader who has been in the game long enough. Okay, so now let's look at Thursday. Now this is Wednesday where I traded the longs. I took longs which turned out to be pretty good. Not a perfect trade, but it was good enough, because as long as you can get something out of it, you're good. So this was Wednesday's trading, and then what did Wednesday do? I noticed that the reversal that I have still been waiting for was still bound to happen. Why? Because on US500, you remember the failed change in state of delivery. I expected the change in state to occur after we get a close below this, okay, below this set of up close. But then what did Wednesday do? Wednesday came, swept that low, but it refused to close below. It went back inside, right? Once I noticed that, I I continued to hold on to my bullish bias that we were only coming lower, maybe to rebalance an imbalance or for manipulation, and then we will resume trading higher. So going into Thursday, I still wanted to target the what? The buy side liquidity. Okay. So on Thursday, I had something marked out as the what? The 0.5 level. Let's look at it. Sorry about that. I was checking my journal to see how I traded the Thursday. So now I want to see the reversal occur on Thursday, right? So let's get into the lower time frames. We'll just go straight to the 15-minute, and then we can see what we have inside there. So Remember that I have told you it was a busy day in terms of news releases, and I like to trade after the news releases. So I was only going to trade after the 10 a.m. news release. There was some news release at 10 existing home sales or something. So I was going to trade after that. So this is Friday Thursday's price action. Okay, right there on US 100. So when price opened, midnight open, it consolidated, then it came to the 10 a.m. news, which we see this heavier price action rather than this consolidation price action right here. And then we go to US 500, we do the same, go down to the 15 minute. I'll be showing you how I traded the Thursday price action. Now it's coming back to me the moment I see lows and highs that were formed on that day up to there. Okay, so let's look at that price action. From that price action, if you look at it from the outside, there is really not much to look at. This was the previous day low, which I believed it was going to be the weekly low. I did not expect this to be tagged if we were going to trade higher. All right, I did not want to see price trade into this if we are going to trade higher. Where is it? Previous day low. Okay, I'll mark the same one. I believe that the reversal had already started, so I did not want to see price trade any lower than this. Actually, I've left out an important part, but I'll show it to you on the daily chart. Okay, I will go back to the daily chart and show you something that I think is very important. I was supposed to talk about it from this perspective. All right, I'll just have to delete that again. Sorry. So let's leave that for let's just have a clean chart for for what I'm about to show you. So remember, I've told you on Wednesday we saw this sweep, what I expected from the change in state, but it did not. It went back inside and closed. So that was a hint for me that the reversal was still going to occur. So what did I do? I measured this week right here. Once I measured that week, what I wanted to see, since I expect now a reversal, because I now have a hint that we are not going to trade any lower than Wednesday's low if we are going to be bullish. So now I start joining my invalidation points and confluences for that bias. So if I do not want us to trade any lower, what do I want to see? I want to see price respect consequent encroachment, or not consequent encroachment, mean threshold of this week that occurred on Wednesday, the week that was unable to form the change in state of delivery. All right. So I will actually label it as failed change in state of delivery, which was confirmed on US 100. So I want to see price remain above 50% level of that week, which is the mean threshold. Remember, I do not have any of this Thursday or Friday's price action. What I am working with at that point and in moment is Wednesday, Tuesday, and Monday price action, and the bias that I had developed earlier in the week. So that is the level that I wanted to see price remain above if we are going to reverse. I came and did the same on US100. I want to see price remain above the 0.5 level, the mean threshold of that week off to the downside, because by this point in moment I believe that it was a manipulation. I should turn my magnet on, but yes, so I believe that it was a manipulation, so I do not really want to see price go any lower than the 0.5 level, the mean threshold. I'll teach more about that in the mentorship and stuff like that, so if you're interested you can join my mentorship. So now we have that level that I do not want to see price close below on the daily chart or daily time frame if we are to remain above. Okay, so let's go back to the 15-minute and do our intraday analysis, the pre 9:30 analysis. So as I was waiting for the 10 a.m. news release so that I can get into the market and get a good setup, a good long setup, because I have explained my bias and everything. Okay, so coming in at 9:30, what I saw was in the AM session, I really did not get any setup. I remember that very correctly. I did not get any setup in the AM session. I think I got in the afternoon session. So all of these lows were what we call the what? Sorry, all these were the AM, not the AM session, the Asian session lows. This right here was the Asian session lows. Okay, ASL, that one. Now let me just mark it in red so that you can see it better. This was the Asian session lows because you can see that these were the lows that had formed on at 8:15 and around those hours. So once they were swept at around 7:45, but I had to wait for the 9:30 bell so that I can get into the market and trade. The same lows were swept on US 500 because remember, I always like to trade if the two are in sync. They are not in sync, I do not get into a trade. Okay. So at 9:30 US 500, where is 9:30? I want to mark up the 9:30. At 9:30 we had this as my last down close candles. All right, this right here, the one I've marked in red. Actually I should go to the lower time frame for a better view. Okay, so I have this as my last down close candle. Once it was traded into, because remember we have already taken the Asian session lows, we have come and even taken even more lows right here and right here. These lows have been taken, these lows have been swept. So at any point I was now expecting the reversal to occur. So I marked this as my last down close, and once it was traded into, it became my change in state of delivery. Think the 3-minute view would be better. Yes. So I took my, once this occurred, it was a change in state of delivery, and I took one position right here at the open of the next candle, as I have explained how I do it. So my first entry was right here, stop loss on the current daily low, right? Then my targets were the previous session highs, previous day highs, and so forth and so forth. You can see that we have so many highs that you can target to your left. So that is what I did. Okay, you can see that there were so many highs to target on the left, right? So once I got into that trade, I took only one position right here. We traded higher, then started the retracement. As I have told you, once I get a retracement, I normally add my positions, and I measure that way. Okay. So once we retraced to the 0.5 level and lower, I added two positions. So now I had around three positions in the trade. Looking at US100 for the same trade, the reason I took it on US500, the S&P, it was the more bullish one, and I will show it to you through this SMT. Remember that I have told you we have already swept a lot of liquidity on the left, so I was ready for a reversal at any point after 9:30 open. So once 9:30 open did all this was the 9:45 low, and we have the 10 a.m. low. 10 a.m. we had the news. So right here, between this low and this low, between these two lows, we had SMT with S&P. Again, SMT is a confluence to each and every trade that I take. Most of the trades that I take have an SMT divergence. So you can see that on US 500, price was willing to trade higher in that moment. So that is where I took that was the SMT, and that's why I took the trade on S&P. So unfortunately, I was stopped out at around around 1:30. Yes, it was 7 minutes to the 1:30 open. I remember very well, and I also texted that in the group. But then I was not done with the day, because what swept me out, I believed, was the PM session open volatility, which is very allowed. So I decided that I was not done for the day, and I used that set that swept me to frame my reversal. That is where again I wanted to see price bounce from. So I marked that as my change in state once again. I'll just clone this. I then marked that. And just delete this. Believe that it's already done with. So once we did this, once we had that sweep right here on US 500 and 100, they both swept the AM session lows. So once we did that, I took that as an opportunity to re-enter the trade on US 100. So this is where the change in state occurred, because this was the last down close candle that was involved in sweeping the AM session lows. This was the AM session low where we had marked the S&P at 10. So which piece of price action was involved in sweeping that low? It was this right here. So which was the last down close set of down close candles? It was these candles. So once I get a close above that, it shows me that the market has decided to change gears to bullish price action. Okay, so of course this is a re-entry, so it's an aggressive entry. I did not wait for all this retracement. I was inside the trade as soon as we got that close, placed my stop below, right below the 121 low, 124 low. All the times that I mentioned are in New York, and then I was targeting this one. You can see that we had some relative equal highs right here. You will notice that in the analysis that I posted on the group, I had marked these ones as the relative equal highs, and it was a very good draw on liquidity. But this is a PM session trade, relative equal highs. So I was in this trade. You can see that it had very little drawdown. It traded very little drawdown. So we traded into this imbalance right here, and then price decided to consolidate. By the time it was getting to the time, I usually close my trade by 4:15, as I've mentioned in that previous trade breakdown. So I closed the trade at around that point. Yes, so it was a break-even trade because I do not like to hold trades if I have not even taken one take profit or something like that. So now you can see that price continued to consolidate up to the next day or something. So let's now get to the main trade of the week that I have been looking forward to do an analysis of, because that is when the real action actually happened. Remember, on the daily, we still have that 0.5 level marked. You see, this 0.5 level is still being respected because this was Thursday, did not close below it. So I was still gunning for that reversal. On US 500, we still had that 0.5 level, or the mean threshold was still being respected. Let's delete that. And, yes, we can see that we never got a close below that 0.5 level. You can see that on Thursday we never got that close. So price was still respecting the levels that I had marked throughout the week. So going into Friday, now I want to see that reversal, and because it is the last day of the week, it was a now or never situation. On Friday, I was actually willing to enter the trade as early as possible. Even it was at 7 a.m. New York time, 6 a.m. New York time, I was ready to enter at any given moment, as long as price is respecting the levels that I had marked up. Okay, so coming into Friday's price action, let's go down to the lower time frames and do a very simple analysis. This was one of the simplest analysis. I think, as you can see, we have hunted for the longs on Tuesday. We got a slight win. On Wednesday, we got, I think, a small. On Tuesday, we got a slight loss. On Wednesday, we made that loss back and made a few more dollars. And then on Thursday, I had a morning trade that was a loss, PM session trade that was a break even. But if you had wanted to take your profits off earlier, it was possible. So coming into Friday, when I opened the trade, when I opened the chart at around 3, 4 a.m. New York time, what I noticed that we had swept the previous day low. And after sweeping such liquidity on a day that I expect a reversal, that starts to form a very good setup for longs to be taken. On both assets, we had swept the previous day low as early as 3 a.m. And what actually occurs at 3 a.m. at between 2 a.m. and 5 a.m. is that if we are going to be bullish, the daily low or the daily high most probably forms between 2 a.m. to 5 a.m., which is the London kill zone. And that is what we see right here. It was not only a low created at between those 2 a.m. in the London kill zone. It was also a low that swept an important sell side liquidity, which is that the previous day liquidity. So after that, you know, if you have been listening, you know that I directly mark the last down close candle that participated, the last set of down close candles that participated in sweeping the previous day low. Okay, so before it is traded into, it's just a last down close candle, because we can have another set of down close candle. So it is not just a change in state of delivery. So once we had that, I have told you as we are starting the video, I was willing to enter this trade as early as possible, but unfortunately I was multitasking on this day. So as much as I had the analysis, I did not get as early as I should have, but I did get that entry later, not much later, because I wanted to get in right here. Just let me just show you. So at around 3:45 and 4:15, we had price trade back inside those last down close candle. So what does that become? It becomes a change in state of delivery right there, right then. Once we get a change in state of delivery, I have told you I have two forms of entry. The first form of entry is enter aggressively, which means that this was supposed to be my entry right here. My stop was to be on the what? On the current daily low. My targets were to be spread all over. To start with, I want to take some off at these relative equal highs, and then I can take some off here, and so forth and so forth. So let us just mark my target as the previous day high, and maybe this high right here, this high right here. Okay, that is sell side liquidity. I'll just mark it like that. Buy side liquidity. Those were my targets, BSL. Okay. So, but I missed this early entry at 4:15, because as I've told you, I had some errands on that day, so I was multitasking. So what did I actually do? When I came back in the market, I found that price had already left. Price had already launched, and it was trading higher, higher and higher. So I want to teach you something that is called institutional order flow entry deal, which is an entry deal that is used on days that price keeps spooling and spooling and spooling. So once I noticed that I had been possibly left by this trade, what I did was I came and marked this fair value gap right here. That one right there above the change in state of delivery. So I wanted to enter anywhere that price will tap that fair value gap. All right. So I placed my orders on the top of that fair value gap, 23,147.4 level. That was where I placed my buy limit right there. So as price came and my stop right there. So as price came and tapped into it at 9:30, it was it at 9:30? Yes, at 9:30 it took my orders and it traded higher. So that is how I traded it. Yes, so I think that was my week in a nutshell. This was one beautiful trade. This was one of the most beautiful trades that I've ever seen, that I have seen in my trading setups and all that. So yes, I think we are done with the trade recaps and the weekly recap and trade breakdowns. So that is how I took the Friday trade. It wasn't There was no SMT, there was no anything, but you have seen it was based on the previous low had been swept. My bias was bullish. We had a change in state, and then I waited for retracement into that fair value gap because I missed the first entry, which was supposed to be lower, but that is okay. I only missed a few points. Yes, and I also entered at 930, which is within my rules. I took some profits off at the relative equal highs. I took half of my position from the relative equal highs. I took another quarter of my positions at the buy side liquidity, and then I left a runner that I closed. I closed I closed the runner later in the PM session when I noticed we are starting to get these funny retracements. So yes, that was it for me. That was my week. I hope you enjoyed the video. Subscribe to my channel. Feel free to reach out to me anytime. My number is on the poster that is attached to the video as it begins, and feel free to reach out and let's get it, and let's keep trading. See you next week. See you on the next video. The next video will be a weekly preview, which I should post by tomorrow evening or after Monday's trading. Yes, so see you then. Thank you for tuning in.